Hey everybody, welcome back to another episode of Cash Flow with GVH. Today I'm going to share with you my lessons learned from 2020. As a reminder, please like this episode and please subscribe to my channel. Also, feel free to share out my channel on your social media sites. You can check out our social media sites as well on Twitter. Also, if you haven't already, check out the description below. You can find different ways of supporting this channel, either through using my Robinhood referral link, or I've also provided my information for Venmo. Okay, so today I'm going to share with you my top 10 lessons learned that I experienced in 2020. Now, again, 2020 was extremely different of a year for everybody as it related to basically everything in life, but more specifically about investing and the stock market. Okay, so number one, my first lesson learned for 2020, stay up to date on current events, trends, and news within the world and the industries in which you are looking to invest or have invested, right? So it is extremely important because the market can jump and dive very quickly based on the smallest events that occur. So the more news that you can follow, the more events that you're keeping up to date on. Also, making sure that you're following as many news sources as possible is extremely valuable in understanding which way the markets may tend to go. Of course, there are always anomalies with things. Stocks can rise and drop for no apparent reason whatsoever. But again, as a general rule, you want to stay up on current world events as well as things that are happening within the industry that you are investing, as well as obviously the individual companies in which you are investing. Number two, be aware of specific events that are occurring within the stocks and the companies that you are investing. Be aware of their earnings reportings, when they are occurring, what happened to the stock the last few earnings reports. Did it dive? Did it rise? Keep aware of all of the things that happen to the stock itself from an earnings report, as well as a dividends event as well. So when dividends are released or announced, please keep in mind and take a look at past history. What did that stock do when those things were announced? Number three, learn and educate yourself and utilize as many educational features like charts and indicators as you possibly can. Learn as many strategies as you possibly can in different ways that other analysts are reading the market, right? So I have a few indicators that I look at on a daily basis. That includes Ichimoku Cloud, that includes moving averages, MACD, RSI, right? So these are indicators that I utilize for very specific ways of reading the market. Again, they're not always perfect. A lot of times, don't rely on just one specific indicator. Use a multitude of indicators, but don't get caught in analysis paralysis either. Don't be afraid to pull the trigger on certain things. If you feel confident in those indicators and you pull the trigger and it doesn't go your way, try to reevaluate. Find out if there were other ways that you could have interpreted those indicators or those charts. But definitely don't go on a whim. Don't bet on things just out of pure speculation. Try to use as many educational and chart indicators as possible. Number four, and this is a big one, shares of stock that you own do not expire. So, big lesson that I learned was buying stock and it dropped. I got, for lack of a better word, scared that it was going to keep dropping, and I sold. Even after holding it for a while, it didn't go back up. I waited and waited. It didn't go back up. I got scared. I sold it. I cut my losses, and I moved on. And then for some of them, they actually did go back up. And the biggest lesson that I've learned based on that is shares of stock do not expire. Do not be afraid to go long and hold on to them. Be okay with holding on to those investments and waiting them out. Now, obviously, there's going to be some where, maybe that company is about to fold or the industry itself is just in a complete decline and there's no chance that it's going to go back, then you may want to consider cutting your losses. But generally speaking, don't cut your losses too short. Wait it out. Wait for the stock itself to go back up and reverse itself. And remember, shares do not expire. Okay, so these next three, 5, 6, and 7, are specifically related to buying and selling options of stock, right? So number 5 is buying a long call that is already out of the money is extremely risky. If you're going to buy long calls, make sure they are already in the money. And if you're not sure what I mean by out of the money and in the money, I have an entire 4-part series that explains options, in the money, out of the money, terminology, definitions, and you can click the link above here to find out more information. But general rule, buying long calls that are out of the money, yes, it's not as much upfront in premium that you're going to be paying, which makes them very attractive. However, anything can happen in the market. The stock may plummet. The stock may stay flat, right? So even if you really think there's a great chance that it's going to go up by the time expiration hits, chances are you're going to be losing in the long run. You're not going to be very successful buying long calls that are already out of the money. If you're going to buy long calls, buy them in the money, possibly find and utilize my poor man's cover call strategy by then selling covered calls against that long leg call. But again, buying long calls that are out of the money, they're cheaper, they're more attractive, but they are going to bite you in the end. Number 6, as I mentioned before, the poor man's covered call. So here's my lesson learned for the poor man's covered call. When you go to buy your long leg, again, follow the strategies that I listed in my poor man's covered call strategy video, which I'll put the link above. But try to buy your long leg at a low point in the stock. After that stock has hit a dip, that's when you want to look to buy that long call, right? You want to make sure that you can buy it as cheap as possible. And then when you go to sell your covered calls against that long leg, you want to try to sell them as the stock is going up, but obviously want to sell a covered call that's going to be far enough out of the money that it's not going to become in the money. But again, the idea behind selling a covered call is making sure you're covering your investment for the long leg. And again, that long leg, you want to try to make sure that you're buying that as cheap as possible when the stock is very low. And then lastly, number 7 around options that I've learned is around the put credit spread. The put credit spread is a great way to make some income every single week, right? You can play it extremely safe, and that's my advice to you. Take small profits and play it extremely safe, right? Stay around that 90 to 95% chance of profit. Yes, you are not going to get the large returns every single week, but if you can do it incrementally and do it small enough and spread it across multiple underlying stocks, you can be assured that you're going to be more profitable than you will be taking a loss. So stay safe with your your put credit spreads. Be more safe than risky. It's not worth losing hundreds of dollars on one when you're only gaining a few dollars on the others, right? Stay safe. Play it very low risk. Number 8 is along similar lines, right? Take calculated risks, but don't bet the farm. If you are going to operate certain strategies, either selling options or trying to capitalize on strong movements on a stock that fits the current trends, or a meme stock that is shooting up and you want to take advantage of that and grab some capital when you can, that's fine. Take calculated risks though. Understand and do your research before jumping into something, right? It's okay to take risks, and some may argue that every single time you place a trade, you're taking a risk, right? But make sure that that risk is calculated. Do your research. Look at the charts and indicators that you've utilized in the past that you trust. Do your research on the company, do your research on the industry, the current events, the news, what's happening in the world, right? Do your research, take those calculated risks, but don't bet the farm. If you're going to do a specific strategy, my recommendation is only use a percentage of your current investments or use a percentage of your buying power. Do not put everything into one strategy. Number 9 is making sure you're setting limits on your losses as well as your profits, and be okay with those limits if they don't pan out. So for example, if you set a loss limit of 50%, once you've hit that 50% loss, get out of the trade, right? Don't keep adjusting your limits by saying, oh, well, if it gets to 60%, then I'll jump out of the trade. It never works out, and you're always going to be arguing with yourself. Set your limits for both losses and profits. And if you set a limit for a profit of 50%, you get out of that trade with 50%, be happy with that. Even if it jumps to 75% or even 200% profit, be okay because you were disciplined and you set that limit. And finally, number 10, be disciplined, right? Do not do things or make trades on a whim, right? Be disciplined in the limits that you set for both losses and profits. Be disciplined in the strategies that you utilize by not betting the farm but having calculated risks. Be disciplined in the research that you do, the education and how much you learn. Be disciplined in the research methods, the charts, the indicators that you utilize, the strategies that you employ. Be very disciplined and methodical about every move that you make. Again, you don't have to go into analysis paralysis. You don't have to overanalyze everything. But as long as you feel confident and you know, and don't lie to yourself, but if you can honestly say to yourself, I did everything that I possibly could to feel comfortable in the trade that I am making, then that's all you can hope for. And then be disciplined in the limits that you set yourself for as far as losses and profits. Okay, so those are my top 10 lessons learned for 2020 as it relates to trading, the stock market, buying and selling shares, trading options, employing option strategies. So I hope you've learned at least a few things from this. Again, I really appreciate everybody's support. Again, check out the description below for other ways you can support this channel with my Robinhood referral link, as well as my link to Venmo. And again, please like and share this video amongst your social media sites, and also make sure you subscribe to my channel. Hope everybody enjoyed watching this video. Have a great day and happy trading.